All right, guys. So we're looking at the cat trade. So first, starting off, the reason why I had cat on my watch list was simply because I was just pretty much just doing my thing where I just look for random stocks and kind of just found cat. And at the time, cat was kind of trading in this little inside day candle setup a little bit, however you want to call it. And I was pretty much looking to see us pretty much break this 9 EMA and go up to the upside, right? Pretty much it did make a move up. I didn't catch it, so I was trying to see if we can break and go from there, but we really didn't, right? So pretty much was, after we've been selling off, we had all these days of selling off. I was looking for us to bottom out to where I can buy it, and ride it back up to that 9 EMA. So pretty much I had to be patient for this setup and wait. So what I did was that's why I was on my watch list. I didn't take it from off the daily. I'm just saying that was like why I was on my watch list. So what I did was no, this is not an evening star. No. Well, we about to get into the star pattern that I took. I took a morning star, but no, it wasn't an evening star. So overall, this setup was like real patient. That's why I was on my watch list. So I was pretty much waiting for it to bottom out to where I can then take calls, right? So right here, we had a trend line, right? I can see that. This happened. This is the candle that we entered on, but I'm on a 2-hour chart. I use the 2 hour for this one. It don't matter what time frame you use. You just go to time frames, whichever time frame you like the most, that's the one you take the trade off of. So as you can see, every time we touch right here, touch right there, and touched again. So as you can see, every time we touch this trend line, we sold off. So anytime you have touches like this, whenever we break, we have a nice break, right? So what happened was we broke out, and then I looked to see here on a 2 hour, we broke out in a 2 hour. So I came down to the 1 hour to kind of see what that candle looked like on a 1 hour. And as you can see, we broke. After we broke, it held the what? What did it hold, guys? What did it break? What did it finally close above? The 9 EMA. So if it's above the 9 EMA, what does that mean? Bullish, right? This is the first time that it closed above the 9 EMA on the lower time frame. So my 2 hour time frame, we had broke the trend line. Then my 1 hour time frame, it gave me that extra confluence that right now we broke above that 9 EMA and we closed above it. So then that made me take calls, right? What's the worst that can happen, right? If we lose the 9 EMA, that's fine. We go back down. But overall, we breaking out of this trend line. I took calls at the end of the day and we had a gap up. And I know that probably sound like crazy because, like Jay, like, that's all that you did to take that trade. Yeah, like that was literally it. I was waiting for it to bottom out to make it move to the upside. And at the time, we had gaps to fill to the upside, right? That was another confirmation that I had where we were bottoming out. We finally broke that trend line and we had a gap to fill above, right? So that gave me that extra confirmation, right? So this is how I kind of looked before I took the trade. So right here on the 1 hour, we reclaimed the 9 EMA. We broke the trend line, retested it. And then there we go. I took calls to basically fill this gap above, but Cat actually did the weirdest thing ever. I mean, it worked out in our favor, but it actually it gapped above the gap. Never seen that before. I have never seen that. Like it literally, after it sold off in the morning, it kind of started to fill that gap. It ain't fully fill it all the way, but overall, like that was kind of weird. It gapped above the gap, but I'm just showing you my confirmation to take this trade, right? And go from there. If you were trend analysis, and we're gonna get into that, I wouldn't call this a lower low at all. I would still call this a double bottom. We'll get into that later. But overall, we couldn't really keep a low. So then we ended up breaking. And then can anybody tell me what this candlestick pattern is right here? This is a morning star, or you can say bullish engulfing, however you want to say it. But this is a morning star pattern. And go from there. So we had our morning star pattern with a trend line break. Take the trade, guys. What other more confirmation do you need? And this trade just ran up, right? So to put that in perspective, so nobody gets confused, you will learn this. I know it's not confusing right now. You will learn this. We look for confirmations. So we had the 1 hour break the trend line, reclaim the 9 EMA. We had a morning star pattern. It looks so much better on TradingView on this particular setup. We had a morning star pattern. We had a break a trend retested. And honestly, I just took the trade, right? Now as far as volume, guys, I'm gonna be honest with you guys, like, you know, you're gonna notice this in the trading thing. I don't really use volume that much. You know, to me, the volume is a little noise. You know, it's cool or whatever. I think when it comes, if you're waiting for volume on some things, sometimes it cause you to not take the trade. I honestly just use market structure, right? We were creating lower lows and lower highs, and right here we kind of just kept, you know, and we kind of bounced up or whatever. That's kind of what I did. I don't really, you know what I mean? To make it make sense, I don't really stress. Um, I don't really stress the volume too much. The only time that I use volume, let's say that a stock is going up, but it's pushed and the volume is decreasing. So let's say that you have a stock going up like this, and the volume is going like this, it's like slowly decreasing, then that lets me know like I shouldn't, you know, be in calls for too much longer because the volume is decreasing at any given moment, it can break down. Did that make sense? Did that make sense? What I just said as far as volume? Okay, cool. So I don't, like I said, I keep trading simple, guys. I just feel like, you know, if you're waiting for volume and everything, sometimes you will just miss out good trading opportunities because as you can see, um, if you were waiting for volume right here, you kind of didn't get it. Even on this candle, we actually had low volume on this candle right here, and we didn't get that volume to the next day. So by the time you waited on that volume spike, you would have already missed a trade. You get what I'm saying? So that's why I tell people like, you know, it's cool or whatever for volume, but overall, guys, it's just hard kind of gauging volume to the stocks. So right now, I literally just trade market structure, right? Do it make sense that a bounce should happen right here? You know what I mean? Like this is literally a simple break and retest, right? You know, stop, it broke it, retest it, and then sent up. That's literally what just happened, right? It broke it, retested, and sent up. It'll probably look better on the lower time frame. Let me go to that real quick so you can kind of get a better break and retest. Clear drawings. Let me go down to, let me try the 30-minute. I'm just trying to get y'all a better break and retest. This one is a pretty good one on the 30-minute. Y'all see that now? Do the break and retest look a little better? Yeah, see that? Yeah, it look a lot better, right? So we had a break, retest right into the non-EMA. What did we do in the non-EMA as well? I zoom in. I forgot I got a monitor. It's bigger screen. Y'all kind of see it now? Y'all see it now? All right, so we broke the trend line, retested it, and then on this time frame, what do we have, guys? What do we have? A golden cross, right? Well, we kind of, you wouldn't have seen that, right? Because it gapped up when it happened. But overall, it was already curling up and it retested it, held the non-EMA. You take the trade, right? So that's what I'm saying, guys. Like it's, you know what I'm saying? It's that it's literally that simple. Like it's it's not hard. Like it's literally that simple. Do I use the RSI? No, I do not. I don't use the RSI. The only thing that I use is the 9 EMA, the 21 EMA. I obviously have volume up for sometimes when I need it. And overall, the stochastics indicator. So this is not an RSI. This is called the stochastic slow indicator. And I'm gonna get into all of that. But yes, good analysis. We did gap up, and now you know we left that gap. We actually gapped above the gap. So this is the gap that we took the trade off of right here. This gap right here. This is why we took the trade, right? We had a retest gap above. It was just giving us so much bullish confirmation. It was like literally just take the trade, Jay, and just call it a day. If you know, if you lose, you lose. Just take the trade, right? So we got that retest, 9 EMA, whatever you want to say, all your confirmations, gap above, we gapped above. Now, how do we take this trade short then? Well, first you have to wait for the market to give you a short opportunity. So number one, we're still holding above the 9 EMA. So there's no reason for me to be taking puts in general, right? Then if I do want to take puts on CAT, well, number one, we have to break below the level that it bounced off of, right? It bounced off of this level right here, this 176.35. So to even take it back down to the downside, we need to break below that. Or we need to show some type of rejections up here to come down here, right? Eventually, we will come down here and fill this gap to the downside, guys, but you have to wait for the market to show you, right? And when we look at the VIX, let's add the VIX onto it. When we look at the VIX, right? when we look at the VIX, right? We need some type of more confirmation that we're going to come up, because right now, what is the VIX doing right now, guys? What is the VIX doing? Consolidating. Great, right? So do we trade in consolidation, guys? No, right? That keeps us chopped up, right? So for me, I do think that the VIX is going to continue to come up, right? But right now we're consolidating, waiting for that next leg or whatever it's about to do. So there's no point in me taking shorts right now because we don't have no confirmation. And for the people that's asking me, Jay, why are you using the VIX? The reason why I'm using the VIX in this scenario, the reason why I'm using the VIX in this particular scenario is because a lot of stocks gapped up today. So I could not find any more trading opportunities. So I came to the VIX when I don't see any more trading opportunities as far as calls or puts, like maybe puts are not ready yet. And calls just seem like we didn't have a large gap up. So calls seem kind of risky to continue. It's a lot harder. You get what I'm saying? It's a lot harder to make a trade because right now I'm anticipating off of, this move keep going up, or trying to take puts and then end up getting chopped up because puts aren't ready yet. Did that make sense? And I ain't trying to get into a full trading set. I'm a full session right now. Y'all gonna learn about it, but I see why I didn't make no more trades this day. It wasn't about me making a lot of money. I mean, that kind of has a play, but overall, as I'm literally sitting on the charts, guys. I'm literally sitting on the charts today, and I'm looking for trading opportunities, and I can't find any. Look at it. I can't find anything. What is this? What the hell is this? What is this? What I'm gonna do with this? What am I going to do with this? I don't see nothing. I know somebody finna say it. I hope nobody said, don't say it don't do it. Don't do it. Do not do it. Because I know I'm gonna have somebody draw this. Do not do it. Do not do it. Because I know some of y'all was looking at that. Don't do it. Do not do that. That is a no-no. Right? So understand that. It's okay if you thought that was a bear flag. I got you. This is why you're here. You're here for that reason, because you gonna do this. This is the bear flag you take, and you see that you negative 80% the next day, right? If this, you know what I'm saying, it was do what you want to do, but I'm gonna teach you the correct way. So overall, there wasn't nothing. Yeah, it was. This is like, okay, understand, guys. Like I said, y'all be getting me in these classes, but when it comes to as far as market structure and just creating flags, right? You want to have like some actual moves, right? You want to have higher highs and higher lows. You want to have all of that, right? In that little slight pullback and then breakdown, right? This was just this. This is literally taking this. This is literally doing this. Right? And as y'all know, do the market move like that, guys? Do the market move like that? Like, understand that. Do the market just move in straight ups and downs? No. So why are you taking a straight up and down pattern? Right? Now, don't get me wrong. And this is what I hate about trading, because sometimes, excuse my language, but this shit works. And people think that they're right and they win on this trade. So guess what happens? They take, let's say that this is a bear flag. They take it and it works. What are they going to do next time they see something like this? What are they gonna do next time? They're gonna do the same thing. But hold on now. This is where the blown accounts come in at. It works this time. They know it works. So what they're gonna do? They're gonna put the whole account in this, and then it don't work that time. They're gonna lose, right? And that's why one thing I hate about the market is sometimes the market will let you get lucky. There's a such thing as luck in this market. Some people generally just get lucky, right? They generally just get lucky, and then they think that they know, or whatever they happen, it worked. That is not work. I mean, yeah, it can work. It could. But overall, guys, look, let's go back to that CVX trade. Let's go back to that. Let's look at that bear flag. Right? Look at that. Look how smooth that move. Look at that. Then it broke down. You had a better trade, right? Look at that. Y'all see that? Y'all see how it's moving in between? Y'all see how it moved in that, right? Let's go look at it on a bigger time frame. Look at the big one. Look at the big one. Y'all see why it moved like that? Look at that. I want y'all to see this with your eyes right now. You see why this bear flag paid like it did? Look how it was moving. right? Look how it paid. It paid real money. This is real money. We caught most of this real money. I'd rather you take your trade on this rather than that other stuff, right? And then look at this bear flag. You can't see it on this time frame when we come down. We just looked at it. Look at this, another bear flag, right? Why did it work? Right? Because it's actually, it looks like a bear flag. It's a real bear flag. It's moving the correct way as the market goes, right? So I just want y'all to see that. Y'all gonna learn all that. If you don't know what it is, I got y'all. Overall, I am looking at CVX right now, but what is CVX doing, right? If you want to take a trade on oil tomorrow, what is it doing? I want y'all to get in here, and I want y'all guys to start understanding this. I want you to see this. People trade in this and they lose. Then they get mad because they lose. This is stress. When you're looking at this, this is stress. This is stress. Put this down in your notes. This is stress. If you don't like being stressed out, this is what it is. Like this, you jump into this trade right now, right here. You're telling yourself, right, them gray hairs. That's what we're gonna call it. It's a gray box for a reason, right? We call them gray hairs. No more, we ain't calling it consolidation. No, we calling this gray hairs, right? That's gray hairs. This is gray hairs right here, right? We want to wait till it break above or below. Now, sometimes you will have where, and I will say this because I know I'm gonna have some people in the future saying Jane told us don't trade in that. Blah, blah, blah. Look, okay, let's say that we're looking at oil index, right? Or ETF that has Chevron in it. Let's say that the Chevron ETF, the ETF that Chevron is, and this some little game for you guys real quick before we got classes over this for a reason, but let me show y'all something real quick. Let's say that we have the oil ETF doing this, right? It's doing the same thing as that. But then what happens is the oil ETF do this. It start breaking down. But this hasn't broken down yet. Now can you get in the trade? Like I'm just saying, like, would you rather get in the trade then? Like you can do it now. You can do it now. It's a little more riskier, but at the same time, it happens, you could do it. But that's because what did I have that gave me that extra, to take that trade? What did I have? I had some confirmation, right? I had some other stuff. Right now, I don't have any confirmation because it's just chopping. So if the ETF broke down, it's like a ball in a chain effect, right? So that means the ETF then broke down, the index then broke down. Okay, this haven't broke down yet, but it's like a ball in a chain effect, right? Eventually, if the ETF is coming down, this coming down eventually. Eventually, maybe not right now, but it's coming down eventually, right? Yeah, you can use spider, mirror, cat, whatever. Like it's like all that. If you see something like that, but only when that's doing it. A lot of you guys, you take it without that. You guys do this, right? You want to take calls or puts when it's still doing that. Like the index doing it, the ETF doing it, the stock doing it, and you still want to take the trade. You have no type of confirmation to take that. Nothing. Everything is consolidating. So you're giving yourself a headache, right? But it's all good. We're going to get into it. I'm definitely going to help you guys out. I'm definitely going to teach you guys. Don't worry about it. Not here to down nobody or anything. You're going to learn it, right? I look at XOP for oil stocks or XLE. I normally just look at XOP though, but it don't really matter. You can look at any one. No, I keep after hours on if I'm day trading, after hours in pre-market if I'm day trading, but swing trading, I turn it off. I'm in that trade. Not saying that it won't work. Like I'm telling you, tomorrow it can break down. I'm just saying, like, for me, I need more confirmation to take a trade, right? To me, this is a board trade. How many confirmations? I need about at least 2 to 3. Just depends. Why? Just because with swing trading, I kind of just want to it's a bigger move. So I don't really care what it does in pre-market because I really don't, that doesn't affect my swing, to be honest. And it don't normally swing trading don't go to those after hour levels or whatever. But I kind of just, it just I like literally it makes it cleaner. Like I just like cleaner charts. It shows me the price action a lot better. So let me add on after hours. You can kind of probably see the difference. It's just too much noise. Forgot how to turn after hours on. Okay, let me add it. like stuff like this just kind of annoying. I don't really like all that. Like stuff like this, it's not really like it ain't really showing me nothing. And then you got this random price action right here. You know what I mean? Like it ain't really, if I'm not day trading, it really don't you know what I'm saying? It's just noise to me, right? So I'd rather just leave it off to have a cleaner chart, right? So I take it off if I'm swing trading, right? I block out as much noise as possible. And then when we come back here, it looks a lot cleaner, right? You see the consolidation. We got the gaps. The gaps are a lot cleaner. Overall, it's just better. Yeah, CVX can definitely go down tomorrow. But like I said, it's still holding above that 9 EMA, and the market is kind of consolidating right now. So I'm not sure. We would need the VIX to break out of this for this to come down. But the VIX can actually, it's at the top of the range. So what can happen is the VIX can reject like it did right here. Let me zoom in real quick. So what can happen is, like, I'm not saying I don't know. I have no bias for tomorrow. I literally don't know. But what can happen is you see how it hit the top of this range and sold off down here. Well, we're at the top of the range again. So what can happen is we can kind of like sell off and come back down to the lower range. So just keep that in mind. If we get a death cross, should we take those puts? If we get a death cross and we're like, breaking out of this consolidation, this little range right here, then definitely can take puts. If the market is showing puts, like I said, you would need the VIX to be going up, you would need SPY to be coming down just to have a cleaner trade. But I wouldn't solely just take it off a death cross. And the reason why is when I first started trading, I used to do that a lot. If I seen a death cross, I'd be like, man, it got to come down. And then you would notice that it says F that death cross, and yeah. So if it's a pattern, not just a consolidation, do you normally get in before the break? Yeah, sometimes. So that's a great question. So if it's a consolidation, if it's a pattern and not a consolidation, will I get in before the break? Sometimes yes. It definitely just depends. Like, if we have some type of ascending triangle or something, right? Then sometimes if the market is showing that it's coming down, right? Then sometimes I'll take it before and just deal with the consequences. Normally, the only time I really take breaks is if, like, before breaks, is if we get like real tight in the pattern, like you see those candlesticks getting smaller, and then I'll probably take it before, because what's going to normally happen is that move is going to happen too fast for you to even get in on the breakout. So normally when they get like real tight like this, I get in. And trying to find other things that's showing me bearish, if that makes sense. So sometimes you will see this pattern in a supply zone, right? So let's call that a supply zone. So we know when we in supply zones, we sell off. So sometimes I see a pattern in the supply zone, and then I go ahead and take it the break before, because like I said, sometimes the breaks just happen too fast for you to get in. So it all just depends on the setup. Yeah, it's all good, guys. What's your ideal scenario for getting in for a pattern? Like I said, the market would have to be agreeing with it. The market would have to be showing me signs of that direction, of some type of direction. If I don't see a direction from other things, then I obviously won't get in before the break. But sometimes you can like look at, like sometimes if you're in Microsoft, you might can look at Apple, and Apple might be moving a certain way, and Microsoft hasn't started yet, but they're like in a pattern, and you can use like that confirmation to take that trade a little early. It's different ways I'm gonna teach you guys, but overall, it's so many ways, guys. It's like, trying to go over this in one class will take forever, right? It's so many ways. I got y'all. What was a good way to stay in calls today? The only best way that I can say that you could have stayed in calls today was riding the 9 EMA up, pretty much probably on the 15-minute. But today was pretty good for, if you were, let's look at Cat. I think Cat did a good job at it. So yeah, like Cat today, once we sold off, we still held above the 9 EMA. actually you could have took, because these went, so these went 1,500% at open. We took profit at open because the only reason why I took profit on cat was because um uh the Dow Jones was in supply zone this morning. A lot of stocks were in supply zone. So as you can see, it actually sold right off. Like a lot of, that's why I sold off so aggressive this morning, because we were in a supply zone on the indexes. We were in a supply zone, which we're gonna learn supply and demand, but we were in a supply zone. So that just told me, like, Jay, hurry up and take profits at open, no hesitation. So that's what I did. Took profits at open, and we had this large candle. I literally missed this entire candle. Like we were still up. Like if you held, I did hold a couple runners. I lost about $4,000 in profit on runners, but I still ended the day with a P&L over $71,000. But at one point, it was at 75,000. But as I held some runners, it kind of sold off a little bit. Then it came down to about 200%, and then it worked its way back up to 600. So this move right here, if you were to day trade this right here from here to here, right here would have been a nice day trade as well, because it just held. I mean, if you wanted to just ride momentum up, like I said, I'm not a momentum trader, guys. So, I can't speak for that. But if you were, just riding momentum up, this was an extra 400%, or no, 600. Was it? Yeah, it was 600 because of contracts. Everybody was just buying in it. So this was an extra 600% if you wanted it for a day trade. But that was the only way to stay in calls today, was look at that non-EMA. Is it a double bottom on VIX 15-minute? It could be. Let's see. Yeah, that indeed is. That is a nice double bottom on VIX. You sold off, refused to make a lower low. Now we created a double bottom. I'm gonna be watching VIX tomorrow to kind of see how we go. What kind of trader do you labor? I'm a day trader. I'm a day trader, but I like swing trading, but I don't like the swing trading that a lot of you guys are used to. I like buying today, selling tomorrow type of swings, and that's kind of my thing. But I am like a day trader, if we're being honest. But I like swing trading the most. I like short-term swing trades. So I normally stay on my trades for about maybe like an hour or a little longer. My trades can last all day. They can last, quick. It just depends on the setup. Yeah, momentum trading is definitely day traders. Like I said, the way I trade, I'm not really I wouldn't consider myself a momentum trader. For example, you see how VIX is in this double bottom right now. A lot of traders are waiting for this break right here. That's their entry. Like if you look at any like chart pattern chart, they're taught to buy it at the neckline. That's what they're taught to buy it at. I buy it before it happens. So as I would have seen, we selling off into this area, and I started seeing us push back up, I will already be in this trade, and then I will be taking profit at the neckline. I know that's probably sounds so different from what you guys are used to, but that's the type of trading I am. I don't like that other stuff, right? So let's go like an example right here, and I'm gonna show you all that in a minute. So like if we had a let's say that we had a bull flag, right? So we got an impulsive move up, and you're going to learn this if you don't know what I'm doing. So let's say we got a bull flag, right? Most traders are taught to buy here at this breakout, right? And hope that it goes higher. I don't do that. I have two entries here. Either I'm buying at this bottom and I'm riding it up right here. Either I'm buying at that bottom using my confirmations and other things. I'm buying at that bottom and I'm selling at this top or the breakout to get a premium spike on my contracts. Because understand, guys, when you are in a play and people start buying things, you get premium spikes. Cat was a prime example of this. People started buying at open, right? That's why the contracts went like that. It wasn't just because Cat moved up that much. It was because traders looking at Cat, oh man, Cat is up $10, right? Cat is up that much, right? So I gotta buy that. It's gonna keep going up, right? And that's why we have those large sell-offs, because a lot of retail traders buy that and then it pulls back on us. right? And that's how we supposed to lose money, right? So I'm in before it happens because I don't have to deal with that. So I'm buying here, exiting on the premium spike, right? Now, if we do break out, because it does happen, if we do break out, I don't buy the breakouts, right? It break out. Normally what happens, how many people have bought a breakout and it did this? It broke out, you thought it was going to go higher, it pulled back, you sold for a loss, and then it just did that. How many of you guys did something like that? You bought the breakout, it pulled back, you sold for a loss just to see it keep going your way, right? I avoid that because I only buy before the move happened, right? Or once it happened, I buy the retest. Now people might say, well, Jay, what if it just keep going? Oh, well, I don't care. Like I'm going to, every time somebody say this, I'm gonna get mad. The reason why is because I don't care. There's thousands of stocks to trade. You think I care about missing the damn breakout and it keep going? All right, wait for the next trade. I don't care about that. Because look, let's look at Cat. Let's go back to the actual trade that we took. Look what happened. What happened? Look, hold on. This is a prime example of what I mean. This is literally, if you don't think what I'm saying is, all that, look, this is exactly what I mean. Look, this is exact setup right here. We broke out. You bought calls here because you're a breakout trader and somebody told you that was the best way to trade. You bought calls at this breakout. It pulled back, or either you held it this time and it pulled back again. You sold for a loss just to see it gap up 1,500% in your face. Just to see it gap up $1,500 in your face, right? And because I bought the pullback, right? You can have a breakout. It ain't that wasn't even a move, right? I buy this any day. Any day. That's me right there. You bought them high priced. That's what you did. You bought them high priced calls and sold for a bigger loss. When I bought these little calls where nobody were looking, and I bought it for a lower price, and there we go. I'm selling it for 1,500%. Literally, exactly what I'm talking about. This is exactly what just happened, right? Exactly what just happened. So that's just kind of what I do. That kind of the way I do it. To me, it helps because I'm buying the contracts at a lower price, so my risk is lower. You get what I'm saying? Because I get those traders all the time that be like, "Oh, that's so dumb, this and that." Come on, guys, I'm buying it at a lower price, right? That's already a lower risk right there. I'm buying it at a lower price. It's already a lower risk. That's number one. Everybody always think the entries is like the best thing to trade. I mean, well, damn, buying the contract lower is also an entry. That's also an entry. The people don't think like that though. Like they think like it has like something on the charts has to be an entry to get in. Like, yeah, entries matter, but at the same time, I'm buying a contract at a lower price. That's already should be an entry right there to you. How long were you in this trade? Oh, we bought this trade. Well, we was in this trade for what? Like, we was in this trade. We bought for me, the market opened up at 3. We were in this trade. The market closes at 3 for me. We bought this trade at like 250 before the market closed, 10 minutes before the market closed. And then it went up like 40% before it closed. And then the next morning it gapped up and we sold right at open. Like right at open, we sold right at open. So we were in this trade for like obviously it was overnight, but total trading time, it was in this trade for like 10 minutes. 10 minutes. That's pretty much it. We was in this trade for like 10 minutes. Like we wasn't in this trade long. I looked at that trade, but saw a double top right after the breakout and talked myself out of the trade. A double top here. Is that what you're calling a double top? I don't know if you're calling that a double top. Yeah, that's not a double top. It's cool. I'm gonna teach you. That's not a double top though. With this double bottom shown on the VIX, do you have any other confirmation besides taking the at the bottom, or is it just so with this one, I would have probably had to have more confirmation to take like a trade. Like let's just say I were to take it at that bottom. Let's see if I add some indicators or something like that. So for me, honestly, the only thing that would have made me take VIX this low was, first of all, we're at a support level, right? We were at a support level. This candle would have been the only one. This bullish engulfing right here Pretty nice bullish engulfing too, right here. I didn't even get to circle the whole thing, but that bullish engulfing, and then just giving me more confirmation. We had our stochastic indicator crossing up. So for me, it probably in the lower time frames would have probably been something else, but overall, probably not. Right then and there to take that, but you did have something. But honestly, guys, understand, like, if you did just take the down trade, right? I mean, your stop loss is right below that level. You know what I'm saying? So it's like, that's why I be trying to get y'all to realize, like, the way I trade, we're buying stuff so cheap. I mean, your stop loss is right below, right? Your stop loss is literally any trade that I take, you're gonna understand my stop loss is right there. I'm never taking a trade where my stop loss is so far away from the trade. You get what I'm saying? Like, my stop loss is right there, right? If we break below this level, cut it, right? Or if we fall below this level, cut it. Did we fall below that level? No, so I could have took the trade. You know what I'm saying? We got the stochastic starting to cross up, right? Stochastics was oversold a little bit, right? Start to cross back up, take the trade. What else do you need? And you will get better at it. Where was cat stop loss? So when it comes to swing trading, a stop loss is a lot harder. Just because, like, my stop loss was if we broke below that day's close. So right here, we closed at 172.29. So if we would have had open, and we would have been below that level, I would have cut it, right? On that particular trade, right? Because that would have made it invalid, right? I wanted to take a bigger loss on that. But with swing trading, stop losses are a lot harder just because swing trading is the only style of trading where you can't really control your stop loss. That's the only thing I don't like about swing trading is you cannot control your stop loss. That's why you want to know day trading, because you can kind of control your stop loss, but don't single out swing trading. The way I do swing trading, I just take swing trades that have the highest reward potential. So that way, sometimes swing trading will open up. Not recently, haven't seen that, but sometimes, I'm not gonna lie, with swing trading, you can open up down 60%. You get what I'm saying? So just keep that in mind when you swing trading. Like, just keep that in mind, guys, that swing trading, there's no such thing as a stop loss. Like, I mean, yeah, it is, but like I said, you can't control what happens after hours. You get what I'm saying? So for me, I don't really load swing trading as much. And if I do, I just take the highest probable setups, because obviously, with cat, if we were to lose this non-EMA, then obviously that's where I would cut the trade. But overall, right here, no, it was a 1 hour right here. We were already we bought this kind of low. So it was kind of like, we retested right here, holding a 9 EMA. So the stop loss is if we can come below that day's close or below that 9 EMA. That below the 9 EMA would have been too big of a loss for me. So I would have did it below the previous day's close. But I'm gonna show you all of that. But yeah, swing trading definitely sucks because you can open up down 60%. That's why I gotta learn day trading. Yeah, it was really more a mental stop loss and just understanding that the contracts were so cheap. Like, these contracts were $20. $20. So you know what I mean? It's kind of like just going with the risk. Like, whenever I swing trade, guys, I know it might sound crazy, but I'm just saying the reality of swing trading. Whenever I personally swing trade, I kind of like put in my mind, like, I'm okay if this, like, worst case scenario, this goes to zero, right? Obviously, we don't want it to go to zero, but like, that's how I size my swing trades accordingly. Is okay, if this worst case scenario, this goes to zero, I'm gonna be fine, right? And I know that sucks, but that's just the reality of swing trading. But some of you guys do it backwards. You zero to hero, or you expect zero on a damn day trade, where you have the ability to control your stop loss, right? You control your stop loss on a day trade, but you still want to hold the shit to zero. But you can control it. Swing trading, okay, you can't control it. You can open up down 99%, right? So just keep that in mind. But that's why we try to buy the best swing trades that has a lower probability of breaking down, right? Or doing whatever we're trying to do. We do the ones like, if we're buying puts, we want to buy puts at resistance. So like the stop loss is right above, right? If we buy calls, we want to buy at support. So the stop loss is right below. You know what I'm saying? So it has a lower chance of doing that. So I haven't added that yet. I'm gonna add a watch list tab. If I have it, I can't remember. But I'm gonna definitely add that to where you can see what I'm watching on a day-to-day basis. But all right, guys, this class is kind of long, so I'm gonna let you guys go. Hopefully, you guys enjoyed the first day. This class kind of went 2 hours, kind of like scheduled. But yeah, what keeps you trading options over forex or indies? The money. The money is way better. I ain't gonna lie, indexes pay though. I just, like I said, I only been trading indexes for a little bit, and I promise you, I started with $5,000. My account is almost at 12K already. So yeah, I ain't gonna fake it. Trading index has been paying too, but options just it's a lower entry, and it pays a lot better. He said told y'all 3 hours. We only been on this class for 2 hours. But all right, guys. See y'all tomorrow. Just in the chat in general. Our first class is Monday. Please get all the things that we said that we're going to grab, and I will see you guys.